where does the price of oil go if it goes higher from the Middle East uncertainty and volatility? And it's a risk factor that with our own internal outlook and our analysis, we've always looked at and will continue to look at. And what history shows and what is very clear is the rise of oil clearly is a headwind to growth, which is non-sensational, and will boost the prices, hence inflation for investors. It tends to have small effects if the increase in price is short-lived and if it's not too high. We would only see material impacts on our economic outlook, which would generally tilting above expectations. We would only change that assessment if oil prices were well above $100 a barrel of oil and stayed there for at least 2 or 3 months. That's when you start to see the drag of growth start to affect business decisions. Now you would start to really push down growth expectations, push up inflation, which is so-called stagflationary, which is tougher policymakers to navigate, right? It's against growth, and it's tough to cut rates if you would see a weakening in the labor market at the same time you have prices going up. And that would probably put some pressure on the financial market. So again, it's a risk factor. I think from an investment standpoint, my counsel would be not to be reactive and to appreciate that there has to be permanence in the oil price volatility to have significant long-range implications.